The price of gold bullion fell on Friday in London, making only its third weekly loss of 2025's 4 months to date, but trading 6.4% beneath Tuesday's fresh record, high of $3,500 per ounce, as prices in China signaled surging demand from the precious metal's number one buyers amid reports of a speculative frenzy fueled by consumer borrowing. Prices in India, in contrast, showed the weakest level of demand against domestic supplies in perhaps a decade, hitting an $80 per troy ounce discount to London quotes when adjusted for the country's bullion import duty and sales tax, according to Newswire Reuters. Following this week's trade war and Fed firing gold spike to $3,500, bullion prices have run up into some levels where we don't think it's a particularly timely place to be putting more capital to work, reckons strategist Rob Slimer at Canadian bank RBC's Wealth Management Division. Technically, agrees Swiss bullion refining and finance group MKS PAMP's Nikki Shields, looking at the price charts, gold has broken a super bullish and aggressive uptrend channel, so it needs to find its footing. Down 0.9% at Friday's 3 p.m. benchmarking auction from before the Easter holidays, the price of gold in US dollar fixed today around $3,265 per troy ounce. That still marked its second highest ever weekend finish in London behind Thursday 17 April's record, $3,305. Euro gold prices meantime lost 1.5% from Easter weekend at €2,866, while the UK pound price dropped 1.3% to £2,461. Prices in Shanghai today made the lowest close in yuan terms in more than a week, dropping below 786 yuan per gram from Tuesday's new all-time high of 831. But in dollar equivalent terms, that put the premium for gold delivered in Shanghai rather than London at nearly $65 per troy ounce, the biggest incentive for new bullion imports into China since September 2023's all-time highs above $100. Against the backdrop of a weakening US dollar and trade policy uncertainty triggering safe haven demand, gold prices at home and abroad have hit new highs in recent days and fluctuated at high levels, says financial news site The Securities Times, part of Beijing's People's Daily. Amid strong trading volumes on both the Shanghai Gold Exchange and the SHFE futures market, gold ETFs have been favored by investors, STCN goes on, with China's 4 largest such products attracting inflows equal to $440 million yesterday alone. Don't fall into the trap of chasing the rise and selling the fall, urges the Shenzhen Business Daily, repeating this week's warnings against risky gold trading from the Chinese authorities and reporting how, on Chinese social media platforms, taking out loans to speculate in gold has become a hot topic. There are 2 main sources: bank consumer loans or maxing out credit cards. Please like this video and subscribe to our channel.